Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. So I got a request from one of my friends to give a lecture on how to write journal entry. So this is basic discussion on journal entry and I have not used any technical term here. I have discussed around 23 transactions and I have written the journal with the narration. Please go through these transactions 2 to 3 times and I'm sure you will be able to get hold on how to write journal entry. Today we are going to discuss how to write the journal entries. So the first transaction given here is purchased machinery for cash rupees 1 lakh. When you are purchasing something, it means that there is an outflow of cash. So whenever there is an outflow of cash, you have to credit cash. So I am writing to cash account. So what is being purchased? Machinery. So you have to debit machinery. So your journal entry is machinery account debit to cash and the amount is for rupees 1 lakh. Now you have to write the narration being machinery purchased. The next transaction is regarding sold for old furniture to A for cash rupees 2000. So you have to see when you get a transaction whether there is a cash involved in it or not. It means whether there is an inflow of cash or there is an outflow of cash. So when you are selling some old furniture, it means there is an inflow of cash. So whenever there is inflow of cash, you have to debit cash account. So here I am debiting cash account debit rupees 2000. So in the first journal entry, when you are purchasing the machinery for cash, there was an outflow of cash. So we have credited cash in my first journal. Now in the second journal, the transaction that is given to us is sold old furniture to A. So cash, there is inflow of cash. So cash is debited by rupees 2000. And what is the outflow? The furniture. So I have to write to furniture account. So when you are selling old furniture to A for cash, you have to write the journal entry cash account debit 2000 to furniture 2000. And in the narration I am writing being furniture sold to A. Now coming to the third journal entry, purchase goods from B on credit rupees 1500. So here there is no cash transaction. There is no outflow of cash. So when you are purchasing goods on credit, your journal entry is purchase account debit to B account. And the amount is for 1500. Being goods purchased on credit. So whenever there is a purchase of goods on credit, the journal entry is purchase account debit to B. So here B is the creditor. Now coming to the fourth journal entry, transaction sold goods for rupees 6000. In the fourth transaction, the goods has been sold for cash. It means there is a inflow of cash. So we have to debit cash. Whenever there is an inflow of cash, you have to debit cash. And the amount is for rupees 6000. So cash account debit to sales. So when there is a purchase of goods for credit, you have to write the journal entry purchase account debit to creditor. And when the goods are being sold for cash, cash account debit to sales. That is cash account debit to sales. And your narration is being goods sold. Now what is the fifth transaction given to you? Purchased building from C rupees 20 lakh. So there is a purchase of building and there is no outflow of cash. So the purchase of building is made on credit. So whenever you get a transaction like this, so you have to write building account debit 20 lakhs to C account. C is the creditor. Now in my first transaction, I again refer to the first transaction. See, there was a purchase of machinery for cash. So there was a purchase of asset. So when asset is being purchased for cash, so asset will be debited and cash will be credited because there was an outflow of cash. But in this transaction, there was a purchase of building, that is asset will be debited, but there was no cash outflow. As because the purchase was made on credit. So creditor has been credited. That is, C is the creditor to whom the amount will be paid at a later time. So building account debited by 20 lakhs to C account 20 lakhs. Now I am writing the narration being building purchased on credit. Coming to the next transaction, purchase stationery for rupees 500. So here there is a cash involved in it because there was an outflow of cash. So I have to credit cash. So what is being purchased? Now stationery. So I have to write stationery account debit to cash account 500. So your journal entry is stationery account debit to cash. So whenever there is a purchase of stationery, you have to write stationery account debit to cash. And your narration is being stationery purchased. Next transaction is purchase goods from D for cash. So here there was a payment made by cash for rupees 9,000 and it is relating to purchase of goods. So whenever there is a purchase of goods for cash, you need to write a journal, very simple, purchase account debit to cash. Purchase account debit to cash account 9,000. Debit 9,000 and credit is given to 9,000. And what is the narration that you have to write? Being goods purchased. So when you are purchasing goods on credit, purchase account debit to creditor, and when you are purchasing goods for cash, purchase is debited and credit is given to cash. Next transaction is purchase typewriter from S and Company on credit. Now there was a purchase of typewriter, that is asset is being purchased. So when you are purchasing an asset, asset will be debited. So what is the nature of the asset? That is the typewriter. And this transaction is on credit and no cash outflow is there for the purchase of this typewriter. Typewriter account debit to S and Company account. So typewriter is the asset. So asset is debited and credit is given to the creditor. So S and Company is the creditor. So I have written to S and Company. And the narration is being typewriter purchased on credit. The next transaction is purchase stationery from Roy and Son. In the transaction number F, there was a purchase of stationery for cash. So when there was a purchase of stationery for cash, we have debited stationery and credit is given to cash. But when you are purchasing stationery on credit, so debit will be given to stationery and credit will be given to the creditor, that is Roy and Son. So your journal entry is stationery account debit 600 to Roy and Sons. Account 600. Being stationery purchased on credit. Next transaction is paid landlord office rent rupees 3000. So there is again an outflow of cash. So cash will be credited and cash is paid for rent. So rent is a nominal account. So rent account debit 3000 to cash. Account rupees 3000. And your narration is being rent paid. So there was an outflow of cash for rupees 3000. So cash has been credited and amount is paid for rent. So rent is debited. Now in next transaction, paid E his salary for the month rupees 4000. Again there is an outflow of cash. So when there is outflow of cash, cash will be credited. And why the cash has been paid? The cash is paid for salary. So salary was debited, salary account debit to cash, account 4000. Being salary paid to E. So when salary is paid, salary account debit to cash. This is a simple journal. Now coming to the next transaction, received from G rupees 2500 on account. Now what is the meaning of on account? On account means there is no reason why you are getting a payment of rupees 2500 from G. So when you are getting something, so cash account will be debited. As there is an inflow of cash, so I have to debit cash. So cash is debited for rupees 2500. And there is no reason why you are getting this 2500 from G. So I have to write to G account. So G is basically the creditor. G is the creditor from whom you are getting a payment of rupees 2500. So I am writing a cash account debit to G. So being cash received from G on account. Next transaction is received rupees 3600 as interest on investment. Again there is an inflow of cash. So whenever there is inflow of cash, cash will be debited. So cash account debit 3600 to interest. So interest is a nominal account. I will discuss about real account, nominal account and personal account in my next lecture. So cash account debit 3600 to interest rupees 3600. So cash is being debited as there is an inflow of cash. And why there is inflow of cash? This is for the interest on investment. So interest is being credited. Interest is a nominal account. Whenever there is an income, nominal account gets credited. So cash account debit to interest rupees 3600. And I have to write the narration being interest received. Next transaction is paid wages to factory staff rupees 8000. So again there is an outflow of cash. So cash will get credited. And why the cash has been paid? The cash has been paid for wages. So wages account debit. I have to debit wages for rupees 8000 and credit is given to cash 8000. Being wages paid. Next transaction, deposited 4000 into bank from office cash. So this is basically a contra entry, and when there is an outflow of cash because you are going to deposit cash into bank. So I have to credit cash, so to cash I have to write here 4000, and where you are going to deposit this cash? Now in bank. So bank account debit rupees 4000 to cash. So when you are depositing cash into bank, you have to write the journal bank account debit to cash, and your narration is being cash deposited into bank. So here in the next transaction, paid P rupees 630 on account. In transaction L, there was a receipt of cash from G. So cash was debited and credit was given to G. And in this transaction, there was a payment made to P. So you have to debit P account and credit to be given to cash account. So P account debit 630 to cash 630. And this on account means why the payment has been made, it is not specified. So here P is just like a debtor. If in the latter date the reason is not specified, you can recover this amount from P if the service is not rendered by P. So P account debit to cash, this is the transaction when you are making a payment on account to somebody. So here P is just like a debtor. So debtor account debit to cash. So you have to write the narration being cash paid to P on account. Now the next transaction given is paid carriage on purchase of goods rupees 500. When you are paying for carriage on purchase, this is carriage inward. So again there is an outflow of cash. So whenever there is outflow of cash, credit will be given to cash. And debit is for carriage inward, because carriage on purchase means carriage inward. So I am writing carriage inward account debit rupees 500 to cash account rupees 500. So your narration is being carriage paid on purchase. So paid carriage on purchase of goods rupees 500. Your journal entry is carriage inward account debit to cash account. Next is paid commission to N. So again there is an outflow of cash. So cash will be credited. And why the cash is being paid? This payment is made for commission. Now commission is a nominal account. So when there is a payment of something, that nominal account will be debited. So commission account debit to cash. So when you get a transaction like payment for something, it may be for salary, it may be for wages, it may be for stationery, it may be for rent. So all those ledgers will be debited and credit will be given to cash. So here commission is being paid for cash. So your journal entry is commission account debit to cash. And the amount is for rupees 200. You have to write the narration being commission paid. Next is paid carriage on sale. So when you are paying for carriage on purchase, it means carriage inward. And when you are paying for carriage on sale, it means carriage outward. And carriage outward is again a nominal account. There is an outflow of cash, so cash will get credited and account will be debited for carriage outward. So I have to debit carriage outward account debit for rupees 400 to cash account 400. And your narration is being carriage paid on sale. The next transaction is returned goods to B for rupees 800. So when there is a return of goods means purchase return. So you have purchased, so purchase account was debited, and when there is a return, then return will get credited. And the return was made to B. So B was a creditor. So now the creditor will get debited. That is B account debit 800 to purchase. And within bracket I am writing this is return purchase return account 800. The actual account is basically the purchase. But when there is a purchase, so purchase will get debited, and when there is a return of purchase, then purchase will get credited. And for your understanding, within bracket I have written return. It means there was a return of goods to the creditor from whom you have purchased. So when there is a purchase of goods on credit, purchase account is debited and credit is given to the creditor. Here, when there is a return of the purchased goods, so creditor is debited and purchase is being credited. Now, the next transaction is received goods returned by P. It means you have sold goods to P. Now, P is returning some part of the goods to you. So, when there is a return, that is you are receiving the goods, it means sales return. So when there is a sales return, so sales account, or for your understanding, I am writing here, sales, that is sales return. Basically, this is sales return, and for understanding, I am writing within bracket return. So sales account debit 4,000 to debtor, that is debtor means P account 4,000. So whenever there is a sale of goods to a debtor, debtor is being debited and credit is given to the sales. Now, when there is a sales return, so you have to debit sales, that is sales account debit to debtor 4,000. And your narration is being goods returned by P. Next is depreciated furniture by rupees 1,050. So, you have to debit depreciation account. This is a non-cash transaction. So depreciation account debit. Please remember this journal. Depreciation will be debited and credit will be given to furniture account. So there is a diminishing in the value of furniture. The furniture value is being diminished because there is a wear and tear of the furniture for its use. So depreciation has to be debited, depreciation account debit to furniture account. So whenever there is a depreciation on any asset, your asset account gets credited and depreciation account is debited. Please remember this journal, depreciation account debit to asset. So depreciation account debit to furniture 1,050 being furniture depreciated. And the last transaction, taken loan from Kumud. So there is an inflow of cash. You are getting cash because you have taken a loan. So when you are getting cash, that means there is a cash inflow. So cash account debit, cash account debit. And which account to be credited? The loan account. That is to loan from Kumud account. So basically loan is the main account, and from Kumud, for understanding, we have to write loan from Kumud account. So when you are taking a loan from somebody, the journal entry is cash account debit to loan. Loan is a liability. So your narration is being loan taken from Kumud. So here I have discussed 23 journal entries. I request all the students to go through this journal at least 2 to 3 times, and I'm sure you will be able to learn how to write the journal entries. In spite of this, if you find any difficulty in understanding, you feel free to communicate with me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.